All right. Good evening, everyone. Thank you so much for joining us tonight for Legal and Legit, the Business Compliance Blueprint. Y'all like how I did that little rhyme? Give me a little credit, okay? Give me a little credit for that little rhyme. But I thought this topic was so important for us to review, as this is the last day of Financial Literacy Month. And I could not imagine sharing this space with anyone else, none other than Attorney Curbeam, who works with business law. And Dreamer and I have done this a couple of times. It's been a couple of times where we have shared the stage, or we've shared online about everything business and tax related. So looking at what's considered legal, what's law, and then looking at taxes, which taxes has a lot of legal jargon. If you've ever been onto the IRS website, it is very attorney heavy, okay? So you do have to have someone in your corner that is able to break it down for you so that you understand truly what you're getting into with business. And one of the things that Dreamer and I have talked about in the past is how people will come looking for an attorney and an accountant after you have gotten yourself into trouble. And so, what we would like to really encourage you all tonight and really champion for tonight is coming to us before you get yourself into any type of trouble. So, consulting with your attorney and your accountant from a proactive standpoint rather than a reactive standpoint. So, if you are joining and this is your first time interacting with either of us, I'm going to do a brief introduction. I do have a little quiz for you guys. You didn't know you was going to do a little work tonight, but you have a little quiz. There are 5 questions that I would love for you to answer. And then we're going to dive into the content of the evening. So, my name is Tiffany Watson. I am the CEO, founder, and principal accountant at All Aboard Financial. And under All Aboard Financial, under that umbrella, I do tax preparation, um, anything tax related, really, compliance, working with you to ensure that not only that your taxes are complete accurately, but also the tax planning piece so that you don't owe Uncle Sam more than what he deserves, right? 'Cause nobody wants to give Uncle Sam more money than he deserves. And my goal when I work with clients is to get you to a zero tax liability, which means that you don't owe the IRS and the IRS doesn't owe you. That is a very beautiful place to be. And so that's what I focus on. Also, under that umbrella, I focus on credit and funding for you personally or your business. And I also do life insurance. So I'm not only making sure that you're in compliance and that you can earn money and grow money, but also protecting your money. So that's who I am. I'm going to let Attorney Curbeam introduce herself.
All right. Thank you so much, Tiffany, for having me. As Tiffany stated, my name is Attorney Curbeam with Curbeam Law. My practice focuses on family law and business law. As it relates to family law, I handle everything family law, from simple divorces to complex divorces with children and assets and liabilities, as well as modifications, motions for contempt. So anything relating to family law, I can assist you with. As it relates to the realm of business law, from starting your business to mergers and acquisitions. So if you're looking for a consultation as it relates to startup costs and what it's going to take you to get your business running legally, ethically, and compliantly, I am the person to contact. You're going to contact me for any negotiations that you have, any contracts that need to be drafted or reviewed. If you're looking to sell your business, if you're looking to purchase another business, if you're looking to merge with another business, you want to make sure to consult me so that you make sure that you have all of your ducks in a row. Make sure that you're not being screwed over as it relates to your documentation. And then I can help you close that deal out and make sure that you're walking away with a profit. And making sure that also too, that you're not being held liable and there's not anything lingering once the sale has been completed. So again, anything from family law to business law, I can assist you.
So see, that's why I had to make sure she was on this webinar tonight. So thank you for just being available, answering my call to do this with me. So now, if you are logged in on your screen, you are going to see a poll. It's going to come up. It's going to ask you 5 questions. So if you could just take a moment to answer those 5 questions, we would greatly appreciate it. This is going to help us know just who's in the room, where you are, your understanding about business law, about taxes, and what you made, what type of questions, things that we may need to answer as we go along tonight. So if you could take a moment and complete this questionnaire, I'll give you a moment of silence. All right. So we have had our moment of silence, and we're going to end that poll. So thank you all for participating in that. Um, I'm going to read the questions out just because those who may not have been able to attend tonight, I'm going to read the questions out so that they can participate as well. Question number 1 says, which of the following is generally required to legally operate a business? Number 1, a detailed marketing plan, a registered business name and relevant licenses permits, a company-wide social media presence, or a large number of employees. All right. Number 2 says true or false. As long as you pay your federal income taxes, you don't need to worry about state or local taxes for your business. Is that true or false? Lord, please tell me. Oh, please let him hit false, Lord. All right. Number 3. What is the primary purpose of an EIN, your employer identification number? Is it to track the personal income of the business owner, to identify a business entity for tax purposes, to register a domain name for a business website, to apply for business credit cards? And number 4, it says, which of these documents is typically used to outline the ownership structure and operating procedures of a multi-member LLC? So is it a non-disclosure agreement, or otherwise known as NDA, an operating agreement, a privacy policy, a terms of service agreement? Number 5, generally speaking, how often are businesses typically required to file and or pay sales tax? Is it annually, quarterly, monthly? It depends on the jurisdiction and sales volume. So those are the questions, okay? So gonna end that. Thank you all for participating. All right, so looks like most of you have a good general understanding of business and taxes, which is great. So that way we can take a deep dive into some content tonight and talk about some different things. So, Attorney Curbeam, would you like to start?
Yes. So we're going to start this off by talking about business law, business structure, and liability. Unfortunately, everyone go-to is a limited liability company. It's almost like no one knows anything about anything else because they go on Google and they depend on Google to give them all of the correct information, which is not the case. So there are a couple different business structures and liability that you need to be aware of. Just so you all are aware, Tiffany and I, whenever we work together, we collab together, you're going to hear one chime in and piggyback because, again, the two are so intertwined. You're going to have the legal aspect of it, and you're going to have the tax implications of the business structure that you choose on. So some of the stuff that I go over, Tiffany is also going to join in on that. So when choosing the entity, it really depends on what your long-term goal is, your tax implications, and whether you have any partners that you want to partake in your business endeavor. So the choice of business structures is significantly impacts your liability, whether it's going to impact your personal assets, whether it's going to impact your business assets. Is very important to know exactly what your long-term goal is to make the determination as to what business route you're going to take. Structures like sole proprietorship and partnerships offer simplicity, but expose business owners to unlimited personal liability. LLCs and corporations provide limited liability, which shields personal assets from business-related risk. That is very important. You work extremely hard to purchase your home, your car. You don't want those things being seized by the IRS or, the federal government because of something that happened as it relates to your business. So the first type of business entity is a sole proprietorship, which it does not produce a separate business entity. Okay. This means your business assets and liabilities are not separate from your personal assets and liabilities, meaning the owner is personally liable for all debts and obligations of the business. When you choose to go this route, this could be a choice because you're typically in a low risk business, and owners who want to test the business idea before forming a more formal business. So you may see something like a DBA. Please understand, a DBA, which is a fictitious name, is not a legal business entity. I'm going to say that again. A DBA, also known as fictitious name, is not a legal business entity, and you have exposed yourself to all types of liability. All of your personal assets are being exposed if you are sued or something happens. We then move on to partnerships. Now you have different forms of partnerships. You have a general partnership, you have limited partnership, limited liability partnership. There are different types of partnerships that you may have. Partnerships are a simple structure. It is for two or more individuals who are going into business together. You may decide that one partner owns 30%, the other one may own 70%. You may have a general partner who is typically involved in the everyday, day-to-day operations. You may have a silent partner who is just getting back their investment. Essentially, they have no dealings in the business. Their hands do not touch the business at all. Depending on the structure of the partnership, you could be exposing yourself to a lot more liability than, say, your silent partner or your limited liability partner. And you typically see the partnerships when it comes to the investors. You have investors that want to come in, they want to put 30% into the business, but they really don't want to have anything to do with it. Their goal is to help you get your business up and going. They're going to get their money and then they're going to leave. Okay, which means now, yep, go ahead.
May I chime in, Attorney Curbeam? Okay, so partnerships, because this is one of those structures that really stress y'all accountant out. Okay, it really stresses your accountant out sometimes, for the simple fact that, going back to what Attorney Curbeam talked about, where you may have a partner who wants to come in, they dump some money into the business, but they want to be silent. And then what happens is, when you guys fall out, okay, over whatever it is, whatever happens, whatever occurred in the partnership, when you guys fall out, guess what? You both are still responsible, or however many partners there are, you both are still responsible for filing the partnership return. I cannot stress that enough. So I don't care if you haven't talked to him, in 8 months, okay, when it comes time to file taxes and that partnership is still legally structured, you better find you better find your partner and make sure that the information is complete, because guess what, you are subject to self-employment tax. They are also subjected to self-employment taxes. And partnerships are pass-through entities, meaning the liability, the income, all of that, profits, losses, it passes through to that individual, okay, and they are responsible. So it doesn't, the IRS does not care that you cannot find Johnny. All right. Find Johnny and file your tax return, your partnership, okay? And going back to the sole proprietorship, this is a question that I get every single year when it comes down to this is, oh my gosh, I didn't file my business, didn't file my business return. That's because it goes on your personal return as a Schedule C, okay? So sole proprietorship is not a separate business return. You have a profit and loss statement that goes on and is attached to your personal 1040. Okay, so you have your 1040, which is your standard tax return, and the Schedule C is attached. All right, that was my little soapbox. That was my
No
soapbox.
problem.
I'm done on that one.
All right. So next you have, let's go. So next you have the limited liability company, the all-time favorite that everyone seems to go to. Your limited liability company it's a blend of partnership as well as corporation. A limited liability company protects you from personal liability in most instances, such as your personal assets, vehicle, house, savings account. They won't be at risk in case your LLC faces bankruptcy or lawsuits. There's a caveat to it though. If you are negligent and you do something intentionally, you could be at risk. So just because you file for a limited liability company does not mean that you are not personally liable. You need to make sure that you are keeping everything separate and you are not commingling. Okay, do not commingle your business with your personal. Keep it separate. That is the purpose and the point of limited liability. You want to limit your liability as a member, aka also known as an owner. Okay. When a member leaves or joins an LLC, typically you will dissolve the LLC unless you have an operating agreement or something in place that says how that business moves forward if someone was to join the business or leave the business. Okay. So again, if you don't have something in place that says what happens with that business, when your partner leaves that LLC, that business by law is supposed to dissolve. Okay, so I need you all to really understand that, because there are lawsuits that are happening because individuals, you guys don't have any operating agreements, you don't have any contracts or anything in place to say what happens, and then you want to kick someone out of the LLC, but you're not paying them. So what do? They go and file for it to be dissolved and do what they need to do, and legally they're not wrong. You didn't have your paper trail.
Yes, you
It's
didn't
very
have a
important
paper
to
trail. I'm sorry.
go ahead.
I was going to just chime in and say that while we're on LLC, please, everyone is not S Corp ready. I know that that's a common structure that you may hear on the internet, or Chat GPT may tell you that you can save money and do all of this. The S Corp is not always the best go-to for your business type or where you are financially in your business. Okay. if you are not ready to run payroll, if you're not ready to take on some of the additional um, requirements for the S Corp, such as an accountable plan and things of that nature, you are not ready to take on the S Corp. And I can't tell you how many S Corps I dissolved in this year alone so far. It's just April. Okay. I've dissolved quite a few S Corps because they were not properly structured. And something that you all should know is that the IRS has the ability to say whether they will honor your S corp or not. They also have the ability to take away your S corp structure, just as the everybody's not ready and capable of having an S corp. The same with C corp. Sometimes people jump into something. I want 100 partners and I'm going to get all this funding and angel investors and all of that. And you may not be ready for that, okay? Because there are certain requirements that you need for your C Corp. And additionally, everybody is not meant to be a nonprofit organization. All right. This is one of those things where people hear that you can get funding, they hear that you can get grants. Oh, I can get loans. I'm looking to do this and that. It does not mean that you are properly structured for that. So it is so important that you speak to someone like Attorney Curbeam, someone like myself, so that way we can guide you on if you are ready to take on these additional structures.
And I'm so glad that Tiffany took us into corporations, because that's next. Everyone does not qualify for an S corporation. Okay. There are eligibility requirements. So just don't automatically assume, oh, well, I have a limited liability company, but I want to be taxed as an S corporation. It doesn't work that way. And so you need to understand the liability that comes along with that, the legal requirements that come with that, the double taxation is what a lot of people don't understand. Double taxation. You have the business taxes, you have the personal taxes. There's double taxation, and that's why I can't express enough. It is critical to your business that you have an accountant. If you do not have an accountant, you are not doing yourself any good. You're doing yourself a disservice by not having an accountant to make sure that you're staying on top of your business, to avoid, I call it the three people, the I, the R, and the S. Okay. I tell Tiffany, so I don't play with those three people. They will not come knocking at my door and ready to put me in handcuffs. Okay.
Correct.
I don't play with them. So
Correct.
you want to take into consideration, one, when it comes to a corporation, it's not like a limited liability company where you have a member, you have owners. There are shareholders. So you have stocks when it comes to this. A lot of people don't know how stocks work. Again, you need an accountant. Don't go into this, oh, I'm going to create a corporation. Well, where are your stocks? How many stocks do you have? How much is each stock worth? Those are things that you need to consider. Aside from the S corporation, you have a C corporation, which is a legal entity that's separate from its owners. Corporations can make a profit, be taxed, and can be held legally liable. Corporations are all offer the strongest protection to its owners from personal liability, but the cost to form a corporation is higher than other structures. Corporations also require extensive record keeping, operational processes, reporting, accounting purposes.
Accounting.
Very, very, very big. Audit. You do not want to
Big
play
audit.
around. Those corporations are 10 times more likely to be audited than any other business. Aside from your S corporation and your C corporation, you have your nonprofit corporations. Nonprofit corporations, you're not in the business to make money. These are you guys say, oh, as Tiffany said, oh, well, I can get a grant. Okay. Remember those 3 people I referred to? Those 3 people will come after you. If you take these individuals' grants, these different scholarships and different things to just do whatever, that money you're using to operate that nonprofit organization and pour back into the community. What was the purpose of you setting up the nonprofit? You need a paper trail to show that's where that money is going. Okay. Tiffany and I are not criminal attorneys. So when the IRS send the big boys to come and get you, we can't come and
We
get you
will
out.
not. We will not be
and,
coming to assist.
and will not answer the phone. Okay. I'm not putting any money on the phone to answer your call because you did not want to listen. Okay.
Right.
Remember, we don't play with those 3 people: the I, the R, or the S.
Right. So let me take you guys back just a little bit and talk about the corporation and the nonprofit. So the C corp, when we say double taxation, it means that the corporation pays taxes on its profits. Because remember, Attorney Curbeam said that it takes its own form, right? So a corporation, C corp, can own property, it can own other businesses. It functions as its own kind of its own person, right? But not only is it paying taxes on the profits, the shareholders pay taxes again when they receive dividends from that C corp. Okay, so let's go back. The corporation pays taxes on its profits. The shareholder then pays taxes when they receive a dividend from that C corp. Okay. Now, a conversation that I typically have to have with clients when we talk about the nonprofit organizations is, well, you know, I can't, we can't make a profit. And so they believe that that means that they have to zero out their books. Okay. Now, I want you to be very clear. A non-for-profit organization, that is a tax structure and a legal structure. It has nothing to do with the amount of money that you can or cannot make. All right. You can make income for that. You can have a profit. However, it must be used for the purpose of what you said you were setting out to do when you structured that nonprofit. So for example, if you say that you are looking to help the youth in the community, you're going to be feeding the youth, you're going to be having programs or whatnot, you need to have a paper trail. Okay. As Attorney Curbeam said, you need a paper trail to show that this is how this money is being used. You can have your payroll, you can have things like that. It is not, a nonprofit is not a way for you to line your pockets. And this is where a lot of people get their timing wrong with the I, the R, and the S with the nonprofits, because they want to try to, oh, I can get a grant, oh, I can get a loan, I can get this. People can donate to me because they're thinking about where they are. I'm the charity case, so I need to line my pockets with some of this grant money. That is not what it's for. And as Attorney Curbeam let you know, and I'm going to reinstate, we will not be taking any phone calls. We may not even act like we know you. If you get in trouble with the feds, because we do things like this webinar to give the information, to let you know what is legally okay. So just be very careful when you are setting up your business and ensuring that you truly understand what your business structure means for you and how you're going to be taxed.
All right. Remember those 3 people: the I, the R, and the S. They may not come today. They may not come tomorrow. They may not come next week. Eventually, they do come knocking at the door. Okay. You're not going to get a phone call. You're not going to get an email. You're going to get a knock at the door. Okay.
Yes. Knock. And they're going to be in unmarked cars, okay?
Yep.
When they do come. Attorney Curbeam brought up a point early on when she talked about commingling funds. And so want to talk about that a little bit because this is something that a lot of people really struggle with in their
Mhm.
business. So mixing personal and business funds together and treating them as if they're interchangeable. Now, what is this? Why is this so important? Right? Because I literally had someone ask me that this season, this tax season, well, I don't see the big issue. Well, let me tell you what the big issue is, okay? If the IRS determines that the monies that went into that business account was, personal and you have claimed deductions, the IRS can go and take away your deductions because they can say, "Oh, well, those were personal expenditures." And if you don't have a way of determining what's business and what's personal, how can you then ensure that you are giving the right information to the IRS? Okay. So what that looks like to the IRS is that you are evading taxes,
Mhm.
okay, or that you are committing fraud. So when I say big words like evasion and fraud, that is how the IRS views those things. When you start mixing your money, you're blurring the lines between what is business and what's personal. You're depositing your business revenue into your personal account. It's because you are trying to evade taxes. That is how the IRS views it. I don't care. You can call them until you blue in the face. They are going to send a letter that's going to tell you, hey, this you are evading taxes, okay? When you are using your personal bank account to pay for business expenses, you know, how's the IRS supposed to know what's valid and what's not? So if you ever get into a situation where your income, your monies are being tied together, you already operating wrong. Okay? So paying personal bills from your business account. Now, this one is one that so many people do. Well, I paid my mortgage and I want to write off my mortgage payments. Sweetie, if we could write off our mortgage payments and our rent payments for ourselves personally, we would have done that. We would have been doing that, okay? But that is not how it works. And so it is so important that you ensure that your income is very clear. Your expenses are very clear that this is me personally versus this is me in my business. When you get to a point where you aren't able to show the IRS, hey, this is truly a business expense. Not only will they take away your deductions for that year, they can disallow it for multiple years, meaning you may not be able to claim business deductions for a couple of years. Now, why is that a problem? I'll tell you. I'm glad y'all asked. It is a problem because one of the benefits to having a business is to be able to reduce your liability by having your legitimate deductions. Okay. So that's one of the beauties of owning a business. But if the IRS feels like you're evading taxes or you're committing fraud, they do have the power to disallow it. And if you believe that, sometimes we like to accountant hop, we like the tax preparer hop and go from one place to the other because you think that that new preparer doesn't know that you have been disallowed. Newsflash, there is a system that we all tap into when we're filing your taxes that will send us a kickback to let us know, hey, this person has been disallowed from claiming business deductions. Okay, so you can tax prepare hop, but that does not mean that you will be free from your disallowances and things of that nature.
Okay. So remember, there's two sides to it. You have the IRS, which is federal, you're dealing with the government, which can lead to criminal charges. And then you have the state level, which are civil actions for restitution, monetary damages, If an individual sues your business, when they're going through the discovery process, they're going to request your bank records and different things of that sort. If they're not able to determine the difference between business and personal, they're going to add you to that lawsuit. So now they're not only suing your business, they're suing you individually, which means now you just exposed yourself to personal liability, which means all of your personal assets are now up for grabs. So that's why it's also important to not commingle, because you get it on both ends. You get it on the federal level and you get it on the state level.
Absolutely. And when you and I tell people this all the time, the Department of Revenue, that's the original OG. Okay. Now
Mm-hmm.
the IRS, they a little thuggish too now. They'll come for you, but they take a little time. Department of Revenue, when they get on you and on your case about taxes at the state level, they come for you very hard, and they will shut your business operations down if you start to have some issues with them. So it is very important. And while we're on this topic, one of the things that a lot of people miss out on is just having accounting software. So have your business bank account set up, attach it to like a QuickBooks. There's one called Zero, there's one called FreshBooks. And it allows you to keep track of your business expenditures, the income that's coming in. So this is just a good way of record keeping. So that way, if you find yourself in the middle of an audit, and I want to let you guys know that any of us could be subject to an audit. Okay. There's no rhyme or reason for audits. Now, there are certainly things that will, go send up a red flag like, oh my gosh, let's take a look at this. One of those things is very large tax returns. Okay. So if you have a refund and you're getting back $20,000, $30,000, the IRS is going to say, "Whoop, hey, hold up, what's happening here?" Okay, so they're going to start sending up those red flags. But any of us could go through an audit. Okay, so no rhyme or reason. If you find yourself in an audit and the IRS is questioning what you're doing, it how amazing is it to be able to pull out your profit and loss statement, your balance sheet, and show the IRS, hey, here's how I'm keeping track of my records. I can't tell you how easy and how simple that is to do, but it's one of the hardest things to get small business owners to do. It's just bookkeeping. So we've given y'all some information, a bit of information so far. Are there any questions? You can drop them in the chat as we go along. If you have something that you're thinking about or something that comes up, comments, we welcome them in the chat. All right, Attorney Curbeam, where are we going next?
Next, we're going to go over to contracts and agreements. Why handshake deals won't cut it. Black and white is your best friend. How do you look going before the judge and saying, well, Your Honor, we had an agreement and these were the terms of the agreement? The other person is going to look at you. I didn't agree to that. I didn't sign anything. There's no paper trail saying that I agreed to that. Black and white is your best friend. Make sure it is in black and white. Make sure both parties sign it. You also have instances where someone wants to go to court and there's an alleged agreement. Only one party signed it. So do you really have an agreement? You also want to make sure when you are reviewing these agreements that there are key clauses that every business owner should understand and should be included in the agreement. A non-compete. Depending on the type of business that you are in, you don't want another, let's say, IB business moving 2 doors down from your business. How is that going to impact and affect your business? So even if you're going into a leasing agreement, you can include a non-compete agreement in that leasing agreement so that you exclusive and make sure that it's exclusive to your business only. So so that you don't have another tenant that's coming in 2 doors down from you doing the same business. You also want to have a non-compete agreement because of the individual that you're doing business with. They're doing business with you. They're getting information relating to your business. They may take off, get all the information, take off a month or two later down the road and go and start another business within the same geographic area. You don't want that. You also want to make sure that you have a non-disclosure agreement. I can't express this enough. I know, especially the ladies like to go out to lunch, they like to go out to dinner, they like to go out to brunch, and they're ready to tell the girls about everything that they have going on. And now you went and you've exposed all of your trade secrets, everything relating to your business. And now that individual is going to go and take all of your ideas. They're going to start that business, or they're just going to lunch with you, treating you to lunch every month just to get your ideas to implement it into their business. Guess what? I live by this. It is not personal, it's business. I do not discuss anything relating to business with anyone. That includes my father. Okay? Dad, you have to sign a non-disclosure agreement because I don't need you taking my trade secrets and my ideas and going to share it with anyone else. If someone does not respect that, that is someone you should not be sharing your business with and having any conversations relating to your business. It is very important to have that non-disclosure agreement because there have been instances where an individual was best friends with someone, got all of their information, knew exactly how this young lady operated her business. She then takes all of these ideas along with the business name, takes the business, starts a completely different business, and trademarks this business. But this is a best friend for over 10 plus years. Okay. Again, it doesn't matter who it is, family, friends, frenemies, foes, it doesn't matter. You do not disclose anything relating to your business to anyone unless there is a non-disclosure agreement in place. And then lastly, you have your vendor, client, and contractor agreements. These are all different agreements. Your vendor agreements, you have a vendor that comes in and does your soda machine. That is a vendor. You need to have an agreement with that vendor so that you know exactly how many times they're supposed to come in, what the supply is supposed to be, how much you're supposed to pay them, and how you're supposed to pay them. That is your vendor. Your client, your customers, these are your everyday people. This is who you contract with to provide that service to. Okay. That needs to be very detailed and outlined as to the services that you provide, start and end date. Sometimes it doesn't have an end date. What services you will be providing, the rate, how that payment will be made, any termination clause, any indemnification clauses, all of that goes in that agreement as relates to your client. And then you have your contractor agreements. Your contractor agreements is, let's say you have an individual coming to work for your business just for a month. They're going to be providing a service that you don't typically provide. And you're just going to do it for this one time or on a trial basis. This is a contractor. They are not a client. They are not a vendor. They are not an employee. They are contracted for this particular service, for this particular time frame, at this particular rate. They're a contractor. You do not direct how they work, when they work. You do not treat them as an employee. Okay. They don't receive any benefits. They don't get any PTO. They are a contractor. Okay. They do not get paid from your business. They do not get a pay stub. They have a contract agreement. There is a 1099 in place. You do not tell them what to do. You hire them to do a particular service and you leave it to them. Once you get into directing them, telling them how to do it, when to do it, they become an employee of your business, and you do not want the legal ramifications that come along with that.
And to piggyback off of that, I'm glad you brought us into that. When it comes down to those individual contractors, okay, the people that you are 1099ing, A lot of the times people want to go that route because they don't want to pay payroll taxes. That is one of those things where you are evading taxes. All right. I want you to understand this tonight. If you are, as Attorney Curbeam said, if you are giving them a set number of hours that they're going to work, you're telling them where they're going to clock in and out, you're giving them specific tasks, they are your employee, and you by law are to pay your employment taxes, okay? Because now you have employees. An independent contractor is only used when this person sets their own schedule, they're working at their own pace. Maybe there's a project, maybe you have like some deadlines, but everything in between when they start and when they finish is flexible. They're able to come and go as they please, things of that nature. When it comes down to oh, I want to bring them on to do the work, but I don't want to pay the payroll taxes. Well, then you have to really start thinking about how this person is going to be beneficial in your business, okay? How are they going to help you? I can tell you, I can attest to the fact that I have actually had three clients in the past that got in trouble because they actually had employees but was going the not the independent contractor route. I didn't know anything about it. So when they got the letters, it was a shock to me and to them. Okay. So we had to go through and make sure that they paid what was owed, and then set them up properly for payroll. Okay. And so when you're getting ready to bring someone into your business, another thing that a lot of people do with independent contractors is they forget to have them fill out the information. They don't get any information on this person. Oh, this person wants to be paid under the table. Okay. Well, when you take someone that if that person comes to you and says, "Hey, I want to be paid under the table. I'm going to do a good job for you, but I need you to pay me under the table." Okay? You let them evade taxes by themselves. All right? You do not evade taxes with them. Okay. So if they're coming to you and they're telling you this, you're going to tell them, this is how I operate. I operate legally, ethically, and compliantly. And this is what I do. I have to get your information so that I can either A, 1099 you because you're doing a service, or B, you're going to be an employee. Now, if they don't want to do either, guess where you tell them to go? The door. Okay. The door. Put them out, find somebody else. Okay? That's how you handle that situation, because what happens is the liability falls on you as the business owner. Okay, because they long gone. They're long gone. They're on to somebody else paying them under the table. But don't evade taxes along with them. Make your presence, your stance known right up front. Hey, I appreciate the value that you bring, but I don't want to take on the liability of having to be caught up in a Department of Revenue, IRS nightmare, because both of those entities get involved and they start chit chatting with each other. Next thing you know, you have a letter. Okay, you got penalties with the Department of Revenue, and you have issues with the IRS. So who's really benefiting? Okay, when you're paying someone under the table, if they want to be under the table, they can get off your line. That's what I tell them. You want to be under the table, get off my line. Okay, all right. So, Attorney Kirby, we do have a hand raised. So is it okay if we take a question?
Yep.
All right, Legina.
Yep. Awesome,
Hey.
awesome information. Can you hear me?
Yes.
Oh, okay. I was just saying, awesome, awesome information. I wanted to ask. I came a little bit late, so I'm not sure if you covered this already. But as far as the contractual pieces that you discussed, is that something that um, the attorney Dremma is able to help with? Like, is that a
Yes.
service that you're offering, the contractual component?
Yes, I do review contracts and I can draft the contracts for you and help negotiate the deal for you, the contract.
Gotcha. Okay. That's something that I think I'd be interested in. I've got a couple of places that I'm currently getting quotes from on, um, documentation and putting together, drafting different types of contracts, and so that's something I'm looking for right now.
Okay. I will drop my information in the chat.
Awesome. Thank you.
You're welcome.
All right. Are there any other questions?
Oh, I had one more.
Uh-huh.
I was listening, but my kids were doing homework too. What was the not payroll? Was it payroll? I think you said it was a payroll platform, accounting platform that you recommended. It was like Fresh and something else.
So it's called FreshBooks. There's one called Zero, but it's Xero.
Okay,
And then there's of course QuickBooks.
gotcha. Is there any recommendation that you guys make for out of those three?
I'm gonna always tell you QuickBooks. QuickBooks can be a pain in the neck sometimes, but it is the most efficient. I have tried FreshBooks as well. It's pretty good, but it doesn't have all of the features if you are it's more so for just kind of the general basic profit and loss where you're tracking income and expenses. QuickBook goes a little bit more in depth where it
Mm-hmm.
allows you to keep track of things such as depreciation. It allows you to keep track of your balance sheet if you have any credit cards, things of that nature. So QuickBooks is more well-rounded. The other two are more basic tracking income and expenses.
Oh, okay, gotcha.
Any other questions? And Attorney Curbeam dropped her information in the chat. She is definitely well versed in business law and can help you draft those contracts.
I don't see it. Mm.
Okay. Here you go. I'll put it here. We'll make sure that you have that info. All right. So if there are no other questions, we're gonna cover a couple of more topics and then we'll open it up again for discussion. Any questions that you guys may have, please feel free to drop them in the chat or raise your hand.
All right. So the next one is intellectual property basics, which we touched on briefly, which is protecting your brand, trademarks, and copyrights. There is a difference. Trademark, you are trademarking your brand, which means your name, your logo, your symbols. Those are trademarks. Copyright, when you want something to be copyrighted, it is your written work. So a book, a recipe, something of that sort. You do not own the rights to your name. Although you file your business with the state as you're required to do, that business is up for grabs. No one in the state of Florida is able to use that same name, but you may have someone in Arkansas, someone in Georgia. They may use that same name, which could be an issue. So you want to make sure that if you plan to use that business name long-term, that logo, you want to file for a trademark. Trademark can be very, very costly. You have to have a federal attorney that can help you with your trademark, which starts at approximately $5,000. It is a process. It does not happen overnight. It is very detailed, very lengthy. So when you start your process, you're looking at a minimum of a year before you can get your items trademarked. When you want something to be copyrighted, it's a little bit sooner than that. But again, that is federal attorney that you would need to consult with, because if for some reason it's denied or appealed, you can't go before the appellate board. You can't go before the trademark board by yourself. They're going to require that you have an attorney represent you. And because it is a federal thing, you have to have an attorney that is well versed in trademark law who practices on the federal level. So it is very important that if you want to protect your business name, your business logo, that you get that process started immediately. You don't want to be operating 5 and 6 years down the line, and then you get a cease and desist letter in the mail because somebody else went and got your business name. And now you have to go and file, you have to go and file a completely different business name, cease and desist. You got to send all of this information to all of your clients. It is a hassle because now you are essentially rebranding your business and you don't want that. So it's best to get on that early and keep that in your mind when you're starting a business. You're going to need that money for trademark purposes. That should be included in your original business plan. Anything on that part, Tiff?
Yeah. So, in going back to talking about just kind of your startup costs, things that you'll need, okay? Number one and number two on the list, the attorney and the accountant that you will use to set up your business, right? Right. That is the first thing that you should be investing in. It should not be an afterthought. So again, today ends Financial Literacy Month. However, as you go along in your business, you should always be consulting with your accountant and your attorney as things change in your business. Maybe you have made a ton of money and you need to let your accountant know. Okay, so that way we can start tax planning and ensure that you aren't paying a ridiculous amount of money to the IRS. Or if anything changes, you get married, you get divorced, anything changes within your business, the structure of it, a partner wants to leave, somebody became disabled. These are all things that you need to ensure that you are doing right off the bat. A couple other things that you want to make sure that you have in place and things that you should be thinking about is opening that business bank account because we talked about earlier not commingling your funds. Okay, so anything that's going to be business related or you're spending out money for that business, it should be coming from your business account. Okay, it should be coming from your business account. And everyone who is attached to that business needs to make sure that that they're putting in their share, that there are conversations being had about how money moves within the business, because that can make or break the business. Okay, it can make and break the business. I have seen relationships that they were thick as thieves when they started. They got into business. Somebody moved that money funny. And now it's a whole knockout, drag out. It's an internet brawl. They pulling up to each other's houses. I mean, it can get ugly. So please make sure that who you are going into business with, going back to those contracts and things that you need to have in place, you need to have clauses available so that you know what happens with the money side of it if something changes or should something happen. Another thing that people don't really plan for, and I'm sure Dreama sees this a lot in doing the contracts, is we don't think about what happens if I become disabled. What happens if I pass away? What happens if I get married and my partner wants to become a part of the business, all of those things. So when you start thinking about business on a detailed side of things, there are so many things that you need to prepare for, but unfortunately a lot of people are reactive, meaning they've gotten themselves into a situation and now they're seeking help as opposed to being, there need to be starting out having these conversations so that way if something pops off, somebody has an attitude, somebody gets the timing wrong, somebody starts moving the money funny, that we know what to do. Okay, so be proactive, not reactive.
And you bring up a really good point, Tiffany, as to what happens if a partner dies or incapacitated. That's why you have an operating agreement in place. The operating agreement is going to outline when your fiscal year ends, when it starts, about your bookkeeping, what happens if someone wants to join the LLC, what percentage of the votes are needed, if someone wants to leave, if someone becomes incapacitated, what happens to their share of the business, what happens to, their money. Does the business continue to operate, or does it automatically dissolve? If it dissolves, how long of a period of time does the other partner have to get the business dissolved? So all of those things are outlined in that operating agreement. Again, if you do not have an agreement in place when you implement that limited liability company, before you can add someone to the business, or if someone leaves, legally that business is supposed to dissolve within 90 days. You're supposed to it's called winding up the business. You're supposed to wind up the business within 90 days of that significant change. The only way that you legally can avoid that is by having the operating agreement. In addition to that, if you have a member that wants to leave the business, well, they leave the business, they get paid. They don't just leave the business, they have an ownership in the business. So they're supposed to get paid based on what the business is worth at the time that they leave. So that's a completely different issue, because there should be some type of buyout agreement that is in place as to how that individual is going to be paid once they leave the company. So it's a lot of detail and paperwork that goes into starting a business. It's not just filing the business with sunbiz.org. It's not just getting with the IRS to get an EIN. No, you have to consult with Tiffany 100%, because you need to know your tax implications for whatever business entity that you're thinking of starting. And then you need to get with me, because you need to know, we need to come up with a game plan. What is your short-term goals? What are your long-term goals? Where do you see yourself going with this business? Is this just something that you're doing as a hobby? Is this something that's going to expand? Or are you going to franchise it out? All of those things need to be discussed, because that is going to determine what other contracts and agreements you need to have in place. All businesses do not have the same agreements in place. All businesses do not have the same operating agreement. So you needs to be very clear what you're doing, where you're going, and how you're going to get there, and how do you protect yourself personally, and how do you protect your business.
Absolutely. And going back to what you said about, and it just left my mind, but it's gonna come back to me. Okay, that's that old age trying to creep in, y'all. But you mentioned some, oh my gosh, and it's gone. Okay, well, we'll move on and we'll come back. One of the things that the last thing that I definitely want to bring up is ensuring that you guys have life insurance on the key people in that business. Okay. If that person passes away, you must think about how this is going to financially impact your business. If that person becomes disabled, are there clauses on that insurance policy to cover those things? Because it can significantly stop your operations. If the main person passes away, or they become disabled, they can no longer work, that can significantly impact you. And it is something that a lot of the times our business owners don't think about. So this is typically what happens. Somebody decides, oh my gosh, I have this amazing idea. I'm going to go start this business. And their friends are like, yeah, girl, go do it. Woo. And they go to Sunbiz and they register that LLC. Okay. Then logo. I gotta get my marketing together. We're on we're putting together our social media pages. We're doing all of that. Okay. And that's cute. It's great. It is a very important piece. But if you have skipped, so from registering that business to logo, you have skipped several steps. Okay.
Mhm.
You did not consult with Dreamer. You did not come see me. So you've already skipped a few steps in that, because you need to, before you go out there and you start putting information out about your business, you want to make sure that it's structured the right way and that it is financially and legally positioned the right way. The last thing you want to do is get up and going and then have to dissolve, or you have to make a sudden change. I actually had a client, got the business started, did all of that, got set up, and then she had some financial hardship and had to totally dissolve. Now, had she come and sat down, we could have looked at her numbers and we could have decided on if now the best time for you to financially take this on. Because starting a business, it is more than just the fees that you pay at SunBiz. It's more than just the fees that you pay for your logo. It's more than that. You have to make sure that not only can the business sustain itself, okay, as you're growing and moving it forward, but also you need to think about, okay, if I'm putting everything into this business, how's it affecting me personally? Okay, that's the thing that we often forget. We get so caught up in, I'm gonna do this business, this is what I'm gonna do, and I love it, I love it, I love it, so much so that we start putting ourselves in a financial bind, and next thing you know, we have to dissolve the business. Somebody come back, a couple of months down the road looking for you, who can't find you. And it's because you did not financially prepare. Okay. And so when you have those when you start really thinking about your business on a deeper level, it is so important that you are legally sound and financially positioned to move yourself forward. So that was a lot of information for tonight. I want to open the floor up for questions. I'm going to click allow to talk for all of you guys. And if you just want to unmute and ask any questions, any comments, anything like that, please feel free to do so. Nothing? Right. And if you are talking, you're muted, so we can't hear you. Um, but if you guys have any questions, comments, please feel free to share them. If not, I have put Attorney Curbeam's information in the chat here. You have her website. Attorney Curbeam, can you tell them how to reach out to you? What's the best route?
Yes, the best route is for you to contact me via my website. There is a form that you can fill out on the website. Please be as detailed as possible. I do, depending on your situation, need to complete a conflict check to make sure that there's no potential ethical conflict as relates to you or any other party that may be involved. And so that is curbeamlaw.com.
All right. And the best way to get in contact with me is also through my website at www.allaboardfinancial.net. You can schedule a discovery call where we will make sure that we're a good fit. And sometimes people get a little bit upset with me when I say we're going to make sure that we're a good fit. And I'm going to explain why that's important, even for Dremma as well. One of the things that you want to make sure is that your attorney and your accountant are well versed in your business type. Okay. They need to be well versed in your business type, your business entity. They need to have the proper knowledge to be able to help you, right? So there's not a one size fits all. Okay. We are not up here saying that we are know-it-alls and that we have all the answers, right? there may be a business situation that you come to me with that I may not be able to assist you with. Okay. You may need representation from a tax attorney. Okay. And things that your accountant, your general accountants may not be able to assist with. So when you fill out the discovery form, the discovery call form, it is so important that you let me know, hey, what are you faced with, so that we can determine if this is going to be the best fit. I can't tell you how many times people come up to me and they have this huge financial issue going on. And I'm like, yeah, that's embezzlement. And you're going to need an attorney, a tax attorney, and possibly a criminal one, if it goes to the left. So these are things that you need to be aware of. Your general accountants, your general tax practitioners may not be able to help your situation. So it is important that we have that discovery call and make sure that it's a good fit. I want to thank you guys for coming tonight, spending a little bit of your evening with us. This has been amazing, fantastic, wonderful. And there is a special prize for the person who registered first. So when we first put this out, there's one person on this call that registered immediately, was the first person, and that's Miss Tamika Davis. So I am going to, Tamika, if you could send me your
Yeah,
Cash App.
yeah,
Yeah,
yeah.
if you could send me your
No,
Cash App
okay, I figured it out.
information. Yes, I'm gonna send you your $25 prize. So we appreciate you supporting us and supporting this webinar. This is going to come to you guys in the form of a replay, a MP4, I believe it is. It's gonna come to you as that file. But again, thank you all for coming tonight. Our information is there. We hope that this was beneficial. Any last words, Attorney Curbeam?
No, just thank you so much, Tiffany, for having me. I really appreciate it.
Yes, yes, no problem. All right. So you all have a great night and take care.